Welcome to the roundtable or Options 101, whatever you want to call it today, or a little session on getting started with futures trading. And before we get too far into it, just a normal IRMA disclosure. IRMA is not a broker-dealer investment advisors for educational purposes only. Options, futures, bonds, and currencies all risks are not suitable for all investors. Past performance is not necessarily indicative of future results. Better read the whole disclosure, pause recording, or go to the bottom of any of our web pages. Okay, so today's agenda, we're going to talk about an introduction to futures trading, types of contracts, contract specifications, some mechanics of trading futures, some platforms, and prop firms. So that's kind of the outline of what we're going to go over. So introduction to futures trading. So what are futures contracts? So they're standardized legal contract to buy or sell an asset at a specific price at a specific time in the future. And the the purpose is to mitigate the risk of price fluctuation. So it started a long time ago. I forget what the first futures contract was, but it was probably commodities. So typical use case would be a farmer has a crop, say corn or something, or wheat, and the price is at a certain level that if he sells his crop at that price, then he can guarantee enough operating income for the year. And to avoid taking a loss if the price of corn or wheat or whatever he's selling goes down, he can sell futures contracts against his crop and lock in a price. So as a way to mitigate those risks of price fluctuations. And airlines do this with oil because they use a lot of fuel, obviously, for airplanes. So again, it's a risk mitigation thing for them. Um, you can obviously use it for speculation, but that's how they started out as a risk management tool. And there's different asset types nowadays. There's commodities, financial instruments, stock market indices, currencies, interest rates, cryptocurrencies. There's even futures on weather and all kinds of crazy stuff. So some basic differences between futures and options. So futures require the buyer and seller to make a transaction on the expiration date. Joe Ross was a friend of mine, and he was trading cattle futures. I think they were feeder cattle. And he said live cattle are misnamed because those are the ones going to slaughter. They should be dead cattle. But anyway, Joe was trading some feeder cattle and forgot about it and actually had to take delivery of like 100,000 pounds of cattle. So he was living in Missouri at the time, and his neighbor had a farm with a field he wasn't using. So, well, we could put the cattle in there. Let's go to Chicago and get them. So they go up to Chicago and take delivery of the cattle. And this farmer friend or neighbor of Joe's had done this before. And he said, well, first, make them get weighed because they always lose some weight during transportation and they'll adjust the price. And that'll help pay for your transportation to get the cattle to Missouri. So they did that, and it did work out. So then Joe got the cattle, beefed them up, and then for I don't know how long he had them, maybe 6 months or a year, and then sold them. And he said it was an interesting experience, but he never do it again. But basically, there is a transaction that has to happen. Somebody's buying and somebody's selling on the expiration date. And there's a linear payoff. It's just one Greek. It's delta. It goes up, you make money. It goes down, you lose money. Options, on the other hand, the buyers of options have rights, but not obligations. The sellers have obligations. So options obviously can expire worthless. The futures contract won't. The futures contract will require a transaction on the expiration date, but not options. And options have a nonlinear payoff, as we know. There's all the Greeks, delta, gamma, vega, theta, rho. And it depends on how you set it up. The payoff graph can be wildly different than just a straight line like a stock or a futures contract would be. So diversification, you have the chance to diversify over lots of different asset classes, and you can use it to hedge existing portfolio exposure. So suppose you're long a bundle of stocks, and you can figure out what your equivalent SPX delta is, then you can hedge that. If you're worried about the market falling, you can sell ES futures, $50 a point or 50 delta, and hedge off that risk on your portfolio without having to sell the stock. And that's important if you're trying to get long-term gains. Or a friend of mine had, I think it was UPS stock. He had a bunch of shares that had been in his family for a while, and he didn't want to sell them. But he wanted to hedge it. So he used options, but you could use futures to hedge it too. Leverage, there is quite a bit of leverage, and typically, I think it's only like, 3% typically is what you need to put up to manage most futures positions. So you can control large positions with a small amount of capital. And it can be super leveraged with prop firms like Apex Trader Funding, where you can get up to 20 accounts. So, and we'll talk about that later, but the risk for the trader, and especially when you're learning futures, is very minimal. So types of futures contracts, we have the equity index futures, the E-minis, the NASDAQ, S&P 500. These are based on the stock market indices, like we said. They're cash settled. There's no physical delivery, but there is a settlement. So um, it's all cash. So there's no assignment risk or anything. Very popular for speculating on overall market movements. Commodity futures, crude, gold, grains, etc. These are based on physical commodities, like we just mentioned, energy, metals, ag, physically settled with delivery and expiration, like Joe Ross with his cattle, and allows hedging by producers and consumers. So currency futures, I used to live in Europe for about, I guess 15 years. I never used futures to hedge because I didn't have enough to do that kind of hedging. I was getting paid in US dollars, but living in Europe, all my expenses, mortgage, everything was in euros. So we would do about, I guess about 4 or 5 thousand euros a month. But we didn't need to hedge it. But larger transactions, like someone I know was buying a boat in France. I think it was like 1 million euros, and he was worried about the price of the euro fluctuating because he was in the U.S. So I think he used a futures contract to lock in essentially his price for the boat. Um, so you can use it for transactions like that, and it's cash settled based on the spot forex rates. And you can speculate with it, of course, just like the other futures. And then we have interest rate futures. So, if you're in real estate, then these are really important. They're based on interest rates like the LIBOR, Eurodollar, et cetera. Cash settled based on the rates and allows hedging the interest rate risk. So the contract specifications, there's a standardized quantity of the underlying asset. For example, 100 ounces of gold, 5,000 bushels of corn, 40,000 pounds for cattle, and determines the monetary value of one contract. And then the tick size is the minimum price fluctuation. For currencies, those are pips. I think it's price improvement. What's the other P for? But it's essentially a tick, but they call it a pip for Forex, and determines the P&L per tick movement. Now, I do have on the website, let me pull this up real quick. There's a tool I built to help people understand how much a tick is on what instruments. So if you go to Tools, Futures Tick Calculator, it brings this up. So if you want to trade, you can look at all of them. It'll give you a giant laundry list of all the futures contracts here. But say you wanted to do like NQ, which I've been trading lately, that's $20 per point or 25 cents for a tick. And you can see on the table, number of ticks equals how many dollars, or number of points equals how many dollars. And if you go to something like ES, it's $50 a point, also 25 cents for a tick movement. And then you can see the dollars for the ticks and the points. You can also do like a 2-year note, or the British pound, for instance. So the tick size is actually a pip, and that's the standard point value. So you can see how much those are. But this calculator is pretty handy if you're new to it, to get a feel for how much a tick is, and how much the profit or loss you'll have based on how much movement there is in the underlying. Okay, expiration months. It's a set calendar months when contracts expire. So, there's every month there's an expiration. Primarily, the ones people trade are the quarterly ones. So right now they're trading today, it's May, and they're trading the June expiration. And when those roll over, then they'll normally switch to September. But there are futures that expire every month. But most people are trading the quarterlies, or every quarter. And it does allow rolling positions from one expiration to the next. There's people that do pairs trading on futures. So they might say, I think the weather is going to be this way. It's going to affect a crop this way. So maybe I'm going to buy September corn and sell June corn, and they'll play those spreads. So it is possible to do that kind of pairs trading. Okay. Settlement, again, there's two types of settlement, physical delivery for commodities like Joe's cattle, metals, energy, and cash settlement for financial products like indices, currencies. And the cash settlement avoids logistical issues with delivery. Like you don't have to go to Chicago and do something when your NQ contract expires. It's all settled to cash. So trading futures, it's very similar to trading just about anything else. There is margin. Now, there's two types of margin. There's initial margin that's required to open a position. Again, it's typically 3 to 12% of the contract's notional value. And then there's maintenance margin, which is how much margin is it required to keep the position open. So options is just like, Reg T or um, well, you can't have futures options too with span margin, but they don't have this concept of initial and maintenance margin. It's just one margin. But futures do have a different margining system. And there's also day trading margin. Now, this requirement is set for each broker, and the exchange doesn't get involved with that. But most brokers do offer reduced margin for day trades. If you go to Thinkorswim, let me see, let me pull this up. Another window. There we go. And you go to trade, and you do this pull down, and you go futures. You can see what the margins are. It's the initial margin. So let's take a look at, let's just say ES. That's right here. So the initial margin for ES is $17,721 right now at Thinkorswim. Now the micros, the MEA is 1/10 of that, so 1,772. So that's how much margin you need at Thinkorswim to open up an MES or an MES contract. Now by contrast, let me just show you a couple other ones. AMP futures margin. I'll do a search here for that. So if we look at the margin calculator at AMP futures, now remember MES at Thinkorswim was $1,700, and that's the maintenance margin. That's how much it costs to keep it open like overnight. But the day trading margin is $40, so quite a bit less. And on the ES right here, 11,800. I think Thinkorswim was like 17,000, so even that's better. But if you're going to trade it intraday, it's only $400 a margin. So you can see the brokers really can knock down those day trading margins. AMP's probably got one of the better ones. A lot of futures places that specialize in futures, $50 is pretty normal for day trading margin for the micros, for ES, for MES. Okay, and yeah, it is substantially lower than maintenance margin. All right, so order types, you're all familiar with all of these. They're all the same. Order types as far as market orders, order buy or sell, contract immediately at the best market price, guarantees execution but not price. Limit orders, it's ordered by at a specific price or better. So the limit orders, buy limits are below the market, sell limits are above. And then a stop order is to buy a future contract above the current price, used to protect short positions. And a sell stop is an order to sell a futures contract below the current market price, used to protect a long position. So typically when you're putting in, say, a long position and you get filled, let me just use this blue. So say you get filled at this price, then you can set a target up here. That would be a limit order. And then here you're long. And then this one would be your stop here. So that would be a sell stop and a sell limit. And either one, and most of the times people will do these as OCO. So as soon as one of these gets hit, it closes out the whole trade. So that's typically how you would use it on a long. For a short, it's obviously if you're going short here, then this would be a buy stop or a buy, oops, buy. It's hard to write with a mouse. That would be a buy limit. And this would be a buy stop. And again, most people make these OCO orders. So if either one gets hit, either you make money or you lose money. As soon as one of these levels gets hit, you're out. So that's how those are used with futures trading. All right, so I'll just go over a couple of trading platforms. NinjaTrader is very popular. You can use it for free, but you can't place orders without a license. So you can either buy a license or you can open up a small account at NinjaTrader, put in like 50, 100 bucks, and then they'll give you access to their platform for free. Um, if you They have some order flow tools. You can buy like a lifetime license. I think it's about $1,600, one-time payment. And then you get access to all their order flow tools. And I think you can subscribe to those on a monthly basis, but I'm not sure. I bought a license, a lifetime license for NinjaTrader years ago, and I think I even upgraded to a multi-broker, I don't know, 5 years ago. Apex Trader Funding gives you a license to NinjaTrader, and I think there's probably other prop firms that do as well. NinjaTrader bought Tradeovate, the brokerage, so that's why it's tightly integrated with Tradeovate. Because it's been around so long for, probably, I don't know, 20 years maybe, huge number of third-party add-ons. There's tons and tons and tons of NinjaTrader add-ons. And again, you can plot, put all kinds of stuff on your NinjaTrader chart and just use it for free, but then you can't place orders with it, which, the easy way is just open up an Apex account and then you get the free license to NinjaTrader. But you don't get access to those order flow tools. But there's third-party order flow tools that you can add in too, so it's not really a showstopper. You can connect to multiple accounts simultaneously. So if you have a live account, an Apex account, an account at FlexiTrade, and maybe another account somewhere else, you can connect them all together and use them at the same time. So it doesn't have a built-in trade copier. You can use Replicanto from Flowbots, and that's let me show you what that looks like. I didn't get a slide for this. It was just I figured it's easier just to pull it up. So this is Flowbot's website in Replicanto. A lot of people are using this. See if I can make that bigger. Yeah, there we go. So basically the way this works is you have an instrument and then you have a leader account and follower accounts. And the method you can use for managing these, let's see, where's my Replicanto? I've got one open somewhere. Yeah, you can use exact quantity, equal quantity, available cash, net lick, percent change ratio, pre-allocation. So there's lots of choices for that. And then as you click these buttons on and off, that'll turn on the copying for that account. You can turn on the advanced trade management. That's ATM, it's not at the money. So you can copy the ATM strategy. So that would be things you would set up like, take a profit at 10 ticks and do a stop at 15 ticks, or do a trailing stop of 15 ticks, or close half of it at 5 ticks and use a 10 tick stop for the rest of it. You can also set up a cross order. So if you have on your chart, say ES, but you're trading some small accounts too, you can say, well, on these two accounts, make those the micros to do a cross order. And it'll just put these orders in for you. So you just have to trade one account on your computer screen, and then it pushes trades to all the other, however many you have. And like Apex, you can have up to 20. So you'd have one on your screen, and the orders could get pushed to the 19 other accounts. And those are the links for those guys. So the next one I want to talk about is Quant Tower. Now this one's interesting because you can also trade options with it. And I was showing some guys in the trading room this morning that. So before we go into the futures part, let me just bring up Quant Tower's website. And on their features, let's see, multiple asset. Where's here it is, options trading. So it's very similar to things like, Thinkorswim, Interactive Brokers, Trader Workstation. It has your option chain and analyzer view, and then the chain plus the analyzed chart. Now, I've never traded options with QuantView or Quant Tower, but it does look promising. And as far as the connections, it's been around for a while. They have tons and tons of connections. So for options trading, you can connect to Interactive Brokers, IQ Feed that's a data provider, Tradier, Ameritrade. So there's lots of places you can connect to. I don't think Tasty's on here. But if you're looking for an alternative to OptionNet Explorer, this may be something you can do. As far as the pricing of it, you can do monthly or lifetimes, like about 1600, and it gives you everything. However, if you only want to buy certain things, like you don't care about the DOM or volume analysis or TPO charts, you can say, well, I want the option trading. And if you have multiple accounts, this is the one you would need for the multiple accounts, the advanced features. So, but if you added up the lifetime for just these two is 1340. So for another 250 bucks, you just get the whole thing. And that's uh that's an alternative for option trading as well as futures trading. But for the futures trading, it's again, it's not free. They do have monthly plans. So you could say I just want to go like 70 bucks a month for the whole thing. Or if I just want to do futures, um, Flexi Trade gives you a license to use Quant Tower. And I think a bunch of the futures brokers also give you a free account. So like I opened up an account at AMP Futures just to try it because there you get with AMP Futures you get the full version of Quant Tower. However, it's limited to the connection to AMP, so it's not as useful as I thought it was going to be. But it does let me play with some of the instruments or the features they've got, so that was interesting. But Flexi Trade does give you a license to trade with them, but it's only one connection, so you can't connect to multiple things at the same time. Now you may be able to use your Flexi Trade Quant Tower and just pay that fee for to have the multi-assets, which would be, let's see, which one was that? I think it's this one. So you could pay like 30 bucks a month and that might be able to energize your actually that would probably work with to have multiple accounts. So you could do like a Flexi Trade account and an Apex account and maybe a couple of your live accounts all together. And it does have trade copying built in, which is pretty nice. It works really well and it's free. There's no extra charge for that. So again, you can connect to multiple accounts simultaneously if you have the advanced features. If you get a free one from like Flexi Trade, you're not going to have that. So that's how those work. And again, you can analyze and trade options through it. So that's their platform. The other one I want to talk about is Sierra Chart. It's not free. It's considered kind of a professional software. They have developers working on it full time. And like I said, here it's difficult to set up, but it's very reliable. There's a guy on YouTube, Matt Miller, Trades by Matt, and he uses Sierra Chart, and a guy, Gary, does all the programming for him. And there's a trading platform help, I think it is. Yeah, that's it. So trading platform help. He's got a whole tutorial of setting up Sierra charts and templates and stuff that you can download. So it's if you need a hand setting up Sierra chart, you can do that. It's like 100 bucks a year, so it's pretty cheap. It's not free. It's a subscription model, and there's no lifetime pricing. Only one connection is allowed per instance. So you can trade multiple accounts with Sierra, but you have to install Sierra Chart multiple times on your computer in different directories. They don't, I think it's all standalone. They don't do anything with the registry or anything, but you'd have to have multiple copies of Sierra running. So they're not all linked together. So you'd have to do something like I did see one guy, he was using a macro. He would have, say, like three instances of Sierra running, and he would program a macro. And I use Macros Express, which is at macros.com. Let me show that to you. So I've used this for years, and this is a really amazing macro editor. I'm going to show you what it looks like. And so this is Macro Express. So I've got different things programmed here. So I could go, let's see, I can just set let me just do like here. This is like the editor for a macro. And you can do all kinds of things. Like you can do mouse control, like move the mouse to a certain place, do a left click, right click, middle click, mouse move. And on the mouse move, it'll give you coordinates. You can say, okay, I want the mouse to move to this exact spot right here. and then do a left click, and then move it over here and do a left click, and move it over here and do a left click. And you can program that and assign it to a shortcut or like a keyboard shortcut. And then say you have your three instances of Sierra chart running and you want to do a buy order, you'd have a macro for buy that would go click, click, click on the three different places and get you filled. Or a sell, it would click in different places, but boom, boom, boom on all three versions of it. And then you just set up the macro keys like that. And you can do something like Stream Deck to load the macros to run your automation on the multiple Sierra charts. So it's a little more complicated because there's no built-in trade copying and you can only have one connection per instance. But it is possible. I've seen people do it on YouTube. Thing I do like about Sierra, it's very fast, it's very stable, and it's a little bit like Option View. In fact, it was if you go to their website, you'll get a feel for it. Let's see Sierra charts here. It's very old school looking. So, you got all these I mean there's videos and stuff, but it's been around a long time and it's very built out, but it definitely feels old school because like the menus they look more like something that came out of Windows 95 instead of a modern Windows version. But it is very stable and very fast. So depends on how you want to trade it. But those are the three main platforms. There's others too, but most people that I've seen, those are the ones that they're using to trade with. Okay, let's keep going here. So let's talk about prop firms. I did a roundtable on this, I think about a month ago. And you do have access to substantial trading capital. So Apex offers accounts from 25 to 300,000. And I did hear about a guy on YouTube who's trading 20, $300,000 accounts that are funded. So he's got $6 million that he's trading with Apex's money. And there's no risk to him really. You get to earn a high percentage of their trading profit. So Apex gives you 100% of the first 25,000 per account. So if you've got 20 accounts, it's 500. The first 500,000 you take out is all yours. And then they get 10% after that. So it's still really good with that 90-10 split. And you gain valuable experience trading with a firm's capital. And if you want to get started with futures, what I would do is just get a free NinjaTrader account and just start practicing, or use Thinkorswim with paper money, but do some kind of simulated trading and just start getting comfortable with putting orders in, getting OCO orders in. For instance, if you go to NinjaTrader, let me just pull a chart over. There we go. This is the basic thing for NinjaTrader. One little trick if you're going to use NinjaTrader to do an OCO order, let me just make sure I'm on sim. I'll just put an order in here. See, should we buy or sell? I don't know. Go to random.org. There we go. So random.org, let's just do a number from 0 to 1. Okay, we'll sell. So I'll just do a sell order. Sell to market. Now, say I want to do an OCO order. I'll just right click over in this area and do OCO. And now I'm going to right click on the chart and do a buy and then do a sell stop or a buy stop. And now these two orders are linked. You see the OCO little green thing up here. So what you want to do is after you do that is uncheck it. So now these are linked. If I look at my orders on the control panel in NinjaTrader, it'll say that these two orders are linked with an OCO. It'll give it like a text string that's identical for both of them. But then you can verify that yes, indeed this is an OCO order. And I'll just move this up here so you can get filled. Okay, so it got filled and it closed both orders. So that's how the OCO works. But it's pretty fast, easy to use. But that was a little hard to find how to do those OCOs in NinjaTrader. But again, if you're just starting out, just do a NinjaTrader account, get a free one, and then after you've kind of gotten used to how you put the orders in, how the markets move, take a look at the tick calculator to figure out, okay, I'm going to trade the micros. So let me just filter on micros. Oops, all micros, and let's go. I've been looking at SPX forever, so I'll just stick with ES, and I'll just do like one or two, maybe like two MES contracts. So that's $10 a point or 250 per tick. And then just put some trades on and watch them and practice getting in, practice getting out, and as you get a feel for it. Then once you're comfortable working the software and how the futures work, then go over to Apex and get a free account. So, and let me show you what that looks like. Apex. So these guys are probably some of the better uh, prop firms in the industry. So they've got 80% off. 1 day to pass means you can pass in 1 day, but you don't have to. That's the minimum. And then you can see they paid out $71 million to traders in the last 3 months. So a lot of people are using this. And just grab one of these. I'd do either the 50 or the 25K, one of these two. This has a 1-to-1 ratio of your profit goal to your trailing threshold, and this is nearly 1-to-1. But as you go up in the account size, that ratio gets worse and worse up to the 300K, where it's about the profit goal is almost 3 times what the trailing threshold is. But as far as efficiency, the 25 and 50Ks are the two best. And then the difference between these two, Rhythmic lets you connect to things like Sierra Chart, Quant Tower, NinjaTrader. However, the Trade plans down here, that only lets you use Trade platform or NinjaTrader. That's it. The other places won't connect to it. So if you want more flexibility, Rhythmic is the one you should pick. And the commissions on the micros are 1 cent cheaper on Rhythmic, so that's another incentive to use those guys. But again, while you're learning, if it's 80% off, it's 20% of this. So 20% of 167 is $34, $33.40. And that's per month. It's a subscription, but it covers the NinjaTrader license and data fees. So you're getting data into NinjaTrader. Now you can get data from other places like TTA or now Schwab as a transition. But it's if you need data for your trading platform, this comes with it. So for 33.40 a month, you get all this stuff and there's no risk to you. That is your risk, the $33. These are essentially trial accounts or evaluation accounts. So they're just seeing, can you trade and manage it so you're not losing too much and you can still reach a profit goal. And if you do that, then they fund you and then now you're trading real money. And then after you get past your trailing drawdown, in this case of 50,100, then that trailing drawdown never increases. But as you make more and more money, then you can start withdrawing that. And there's really the only risk is what you pay for subscription fees or activation fees for the PA accounts. So it's really good as far as risk management from your own point of view. You're not risking any of your own capital. If you say, okay, I'm going to try futures trading, I'm going to go to AMP, put in $1,000 and go for it, you'll probably blow up the account. So just start out trading sim, and then once you're comfortable with it, have a good strategy, you think it's working okay, go get an account at Apex, and then they fund you. You don't have any risk. You're going to spend $35 a month, which is like buying a lunch, and but that's the most you can lose and just keep at it and keep working the trades. So again, we just show the cost. So it's about $33 a month. And after you pass the evaluation for the 50K accounts is one I like. It's $140 for a lifetime fee or 85 a month. So there is a kind of a joke on the internet about the curse of a lot paying for lifetime because it costs more, but most people will blow up an account in the first month if they're going to blow it up. So Apex makes money on these, so they'd rather have you do the 85 a month. But again, there's this kind of urban legend of the curse of a lifetime payment fee for the PA accounts. Um, Personally, that's what I did. I've got two PA accounts funded. So I figured now that I've got them funded, there's no rush. They're both down a couple $100, but that's not a big deal. They're 50K accounts. So I've got 25 or $100 of drawdown to work with. The reset fees are optional if you fail the evaluation. So say you bust your trailing drawdown, boom, account stops working, it's done. Now the way it works with the evaluations, if you have an evaluation that's failed, when the account rebuilds, they turn it back on, they kind of reset it for you. So you can reset it. You pay a fee for it, so $80 to reset a Rhythmic account. And I don't know if the resets are half price right now. They usually are during these sales. It doesn't really say on here. It just says what the values are, the discount and how many days to pass. But I think the resets are also half price. So you just have to make a decision. Okay, if I wait for the billing cycle to hit the credit card again for $33, it will reset this account. Or if they're still having an 80% sale, I can just cancel the one that just blew up and just go get a new one. So it's going to cost the same, but now you don't have to wait until that billing cycle comes again. You can just go for it right away. And I've seen it doesn't take very long for them to set these up. If it's during the trading day, I've seen new accounts get set up in like 10, 15 minutes. So it's pretty quick. So if you do blow an account, say I've been kind of aggressive on my valuation accounts because, I don't want to wait like a month or two to get funded. I want to try and do it like the last one I did in 3 days, which was probably too aggressive, but anyway, I was trading big on on those, but that's if you do fail the evaluation, that's kind of your thinking process. And again, the PA accounts can't be reset. If you blow the PA account, you basically have to start over and go get another evaluation account past that and fund it and everything. And then you can get back to having your PA account. And how much can you make? Well, you can make a lot. There's like that Matt Miller in Austin. He's trading 20, 50K accounts and he's averaging $400 a day. So if you do the math, the first 3 months you can only take out $2,000 per pay period or four, that there's two pay periods a month. So you can take out 4,000 per account per month. So he's been taking out 80,000 a month with those 20 accounts. Now, as soon as that 30-day or 3-month window is over, then there's no limit. So if he's averaging $400 a day, then that would be 8,000 a day, 40,000 a week, or about 200,000 a month is what he could take out based on making $400 a day on each one of those 20 accounts. Um, and yeah, the initial cap. So the 25K accounts, you can take out $1,500 per pay period or 3,000 a month, and the 50K bumps that up to 2,000 a month. And again, you can do 20 accounts. So the leveraging, that's what makes those prop firms so important is the leveraging. So for every $10 per day that you net, then you're making about 50 grand a day, I guess, or 50 grand a year. Yeah, 50,000 a year. And I've got a tracking program for that. So let me just pull this over. So this shows if I'm doing $10 per day net, that would be, and after you pull out the 25,000, then he would be making 45,000 a year. That'd take a while. That would take a half a year. But if you can get, $25 a day over across 20 accounts, then that's 100,000 a year, just making $25 a day futures trades. Now it will take you a long time to reach your target at $25 a day because you got to get up to, let's say you do the 25K account and be 60 days. So you got 2 months to get funded doing this. So if you could try during the evaluations to get more, say, $50, then that would take you about a month to get funded. And then if you can still do the $50 a day, that's about, well, in the long run, about just under 19,000 a month or 225,000 a year. And that's just 50 bucks a day net per trading account. That would have to include commissions and fees and all that, of course. The round trip commissions for these minis are about $4, a little bit less, like $3.98. And on the micros, it's $1.02 on Rhythmic. So that's how those work. So again, the scaling is what makes the prop firms so attractive. And again, the path to success would be if you've never done this before, just get a free copy in NinjaTrader, start trading it, and get used to putting the orders in, putting OCO orders in, maybe bracket orders, that kind of stuff. Just get used to the interface, practice, and then once you have a few strategies like a wick test or trader strict entry, or there's lots of different ways you can make money. Um, just then go ahead and get an Apex account. Again, the risk is really low. The most you can lose is that $33 per month. But it also gives you the platform and the data. So that's your next step. And then after you start getting some funded accounts and start making payments and take some of that money, put it in some live accounts of your own and trade those too. Because if you're trading for somebody like Apex, you're a 1099 contractor. It's like they're paying you as like a not an employee, but they're paying you a salary essentially. So you have to pay your own tax, and there's no tax benefits like there is if you're trading the futures contracts. Remember, those are IRS Section 1256 contracts. So 60% of the gain, even if you hold it for 2 seconds, is taxed at the long-term rate, and the other 40% is at your marginal rate. So that's treated as ordinary income. But the 1099 contractor, what you get paid at from Apex is all ordinary income. So the taxes are a little bit better if you're trading your own. But just start out with Apex and have them, work your way up to 20 accounts. Another interesting idea is there's no reason you can't have an account at Apex and at Flexi Trade. So airmere.com/flexi will take you over there. They're also having an 80% off sale. So you can get 10 accounts, 10 50K accounts at Flexi for $300, but there's no recurring fees. So you can get up to 20 accounts there. So you could use Quant Tower, for instance, and trade copy. You'd be trading one account on your screen, and it could be pushing it to 39 other accounts. So if we go back to that spreadsheet, say you have 20 Apex accounts and 20 Flexi accounts. Well, now if you can average $100 a day, you're making 900,000 a year with 40 accounts. Just making 100, and even if it's $10 a day, it's still 90,000 a year with 40 accounts with $10 a day profit. Now, again, it's going to take you a while to work up to that, but once you get to that, or even 25, it's still 225,000 a year. Um, Flexi Trade only has one payout a month, so there are some differences. It's newer. They don't have the same track record that Apex does. So if you're going to choose one or the other, I would start. I mean, you could go with Flexi and just get like one 25K account, get a copy of Quant Tower, learn how to use it. They cover the data. There's no recurring fees, so that's actually a pretty good way to start. But Apex does have a few built-in safety things. So there's a flatten accounts button on the Apex after you log in on their website. So if you have to go to the ER and need to close your positions, just log into the Apex site from your phone or tablet or whatever, and then just say flatten accounts, and they'll just close all the open orders and close the open positions. And then Apex also in the last minute of trading for the day, they also attempt to close any open position. So they're trying to help you. They say don't count on it because it may not work, but they've got code in place to close all open positions for all their customers. And again, that's why it uses the day trading margin. I think Trade Evade's like $50 margin for a MES contract, for instance. So that's how I would get started. Just, learn the platform and then get some prop firm accounts. It's really low risk, especially Flexi Trade. There's no recurring billing. Um, and yeah, just practice, practice, practice. But once you can get up to the point where you're profitable, just keep leveraging up to where you can max out these accounts. And then once you get to PA accounts, start taking some money out and putting in your own accounts and then trade your account and the prop firm accounts. And just keep leverage, leverage, leverage. So that's how I would do that. Let me see if there's any questions. I don't see any. All right, well, that's all I've got. Hopefully you found it useful, but that's kind of the way the futures work. It's pretty simple, either buy or sell. That's the big thing here is you take your trading chart and you say I want to buy, I want to sell, and how I get out, how do I manage this? Your ATM strategies, you can set up a custom one. So you can say I want to do like 2 ticks, and maybe on the first one I'm going to do one contract, next one maybe I'll do like three. I'll take one off initially and then two the second time, and I'll have this stop like 10 ticks, and I'll do 10 on the profit target. And this will also be 10, and maybe this is 15, something like that. So there's your ATM strategy, and you can set that up. Now there's 3 contracts. I'm still on sim, so let's see, which way should I go? I'll go sell market. And now you can see those are all the orders in there. There's the stops, and then there's the buy one and buy two. Looks like it's going to get stopped out. Probably will. If it does, they're all OCO orders, so they'll all cancel each other out anyway. But yeah, see, they're just canceled it. But just practice using all that stuff and go forth and make money. All right, thanks everyone. We will if you have any questions, feel free to stop by the trading group or the forums and let me know. And good luck to you, good trading, and yeah, let me know if you have any questions.